In a move that has sent ripples through both the financial and technological worlds, President Trump has signed an executive order establishing a U.S. strategic Bitcoin reserve. This decision marks a significant shift in the U.S. government's approach to cryptocurrencies, positioning the nation as a major player in the evolving digital asset landscape. The reserve, envisioned as a strategic asset akin to gold reserves, underscores the growing recognition of Bitcoin's potential impact on global finance. President Trump's executive order also calls for the creation of a digital asset stockpile intended to house a diverse range of cryptocurrencies beyond Bitcoin. This move comes as the US government finds itself in possession of a significant amount of Bitcoin, largely seized during various criminal investigations. Initial estimates suggest that the government currently holds approximately 200,000 Bitcoin, a figure that could fluctuate as a comprehensive audit of cryptocurrency holdings across all government departments is underway. The executive order mandates this audit, aiming to gain a complete and transparent picture of the government's existing digital asset portfolio. The establishment of the Strategic Bitcoin Reserve signals a potential shift in the global perception of Bitcoin. While its price has been known for its volatility, the US government's decision to hold it as a strategic asset could be interpreted as a vote of confidence in its long-term value. This move could potentially encourage other nations to explore similar strategies, further solidifying Bitcoin's position within the existing global financial framework. One of the most notable aspects of the Strategic Bitcoin Reserve is its funding mechanism. The executive order explicitly states that the reserve will be stocked using cryptocurrencies, primarily Bitcoin, that have been forfeited to the government through various legal proceedings. This approach, while seemingly straightforward, has sparked debate among economists and cryptocurrency experts alike. Proponents argue that it presents a cost-effective way to build the reserve without burdening taxpayers or impacting the national debt. The executive order tasks the Treasury and Commerce Secretaries with developing a comprehensive strategy for acquiring additional Bitcoin to bolster the reserve. However, a key stipulation of this mandate is that the acquisition strategy must be budget neutral. This means that any purchase of additional Bitcoin cannot rely on taxpayer dollars and must be financed through alternative means, such as proceeds from the sale of other government assets or potential revenue generated from the digital asset stockpile. The decision to rely on forfeited assets as the primary funding source for the Strategic Bitcoin Reserve is a pragmatic one, given the complexities of allocating funds for cryptocurrency acquisition within the existing budgetary framework. This approach also aligns with the administration's focus on fiscal responsibility and minimizing the impact on taxpayers. However, critics argue that this method alone may not be sufficient to build a reserve substantial enough to achieve its intended strategic objectives. The announcement of this strategic Bitcoin reserve has ignited a firestorm of reactions within the cryptocurrency community and beyond. While the news was initially met with a surge in Bitcoin's price, this was quickly tempered by the realization that the US government would not be actively purchasing Bitcoin on the open market. This led to a subsequent dip in price, highlighting the market's sensitivity to government actions and pronouncements within the cryptocurrency space. Opinions on the reserve itself are divided. Some cryptocurrency enthusiasts have expressed disappointment that the US government is not taking a more active role in acquiring Bitcoin, suggesting that reliance solely on forfeited assets is a missed opportunity to exert greater influence on the market. Others, however, view the move as a positive step, albeit a cautious one, towards greater government acceptance and integration of cryptocurrencies into the existing financial system. The establishment of the Strategic Bitcoin Reserve has also reignited the debate about the role of government in regulating and overseeing the cryptocurrency market. While some welcome the move as a sign of growing legitimacy and oversight, others fear that it could be a precursor to more stringent regulations that might stifle innovation within the space. The coming months will likely witness intensified lobbying efforts from both sides as they seek to influence the direction of future cryptocurrency policy. The creation of the strategic Bitcoin reserve marks a significant foray into uncharted territory, and as with any pioneering endeavor, it comes with its fair share of uncertainties and concerns. One of the most pressing questions is what tangible benefits, if any, this reserve will bring to American citizens. While the administration has touted its strategic importance, the practical implications for the average American remain unclear. Another key concern revolves around the legal and regulatory framework surrounding the reserve. As it stands, there is no existing legislation that specifically addresses the establishment or management of a national cryptocurrency reserve. This lack of clarity raises questions about the reserve's legal standing, its vulnerability to potential legal challenges, and the overall transparency of its operations. Furthermore, the long-term viability of the reserve hinges on the unpredictable nature of the cryptocurrency market itself. While Bitcoin has shown resilience and growth over the past decade, its future remains uncertain. The possibility of future market crashes or the emergence of competing cryptocurrencies could significantly impact the value and strategic importance of the reserve.